Hey everyone, in this video I'm going to bring you one fantastic dividend stock that yields almost 10% that you can buy for 2024. Now, I'm not only going to show you the stock's dividend yield, but I'm going to show you some other characteristics that I really like about the stock, the reasons why I'm recommending it. In fact, those reasons why I'm recommending the stock are more valuable than the dividend yield. Right? So I think those are more reasons to buy this stock than the dividend yield. Now, it just so happens that it comes with a very attractive dividend yield. That happens to be a coincidence because of the more favorable characteristics of the business that I'm going to talk about, which is why I think this is a great dividend stock to buy for 2024. So without further ado, let's jump in. Let's see what the stock is and why I like it so much.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the stock that I'm talking about is Altria Group, ticker symbol MO. Now, Altria Group has grown revenue over the last decade, but revenue growth is not one of the core reasons why I recommend the stock. Of course, the tobacco industry is in decline, and revenue growth is not something to expect from this stock. Still, 20.56 billion in revenue in the most recent trailing 12-month period. That's up from 17 billion in 2014. So slight revenue growth over the decade. That's reasonable to expect from Altria Group going forward. Either flat or low single digit decline or low single digit increase is what you can expect from Altria Group. Again, revenue growth is not the reason to invest in this stock. Now, I highlighted earlier that the stock has a very attractive dividend yield of 9.53%, almost 10% dividend yield. Investors, in fact, if I was investing in this stock, I would be happy if the stock price remained flat and I was able to take 9.5% dividend yields every year. If my total return was 9.53% yearly with Altria Group stock, I would be satisfied. So this is that strong of a dividend yield that the dividend yield alone would be a solid return for shareholders. But let's get into the real reasons why I like the stock. And here's where that starts. Altria Group demonstrates strong economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from $100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. So now that I've shown you how economies in scale manifests itself, look at Altria Group, growing from a little above 45% operating profit margin in 2014 all the way up to 56.06% operating profit margin in the most recent trailing 12-month period. Now, not only does this demonstrate economies in scale, but also this is one of the highest operating profit margins of any company in the world. In fact, the highest operating profit margin company that I know of is Visa at around 66% operating profit margin. So Altria Group is up there with the highest of the operating profit margin companies in the world. In fact, it's in the top 5 of all of the companies that I follow, and that consisting of Visa, MasterCard, Altria Group, and British American Tobacco are up there in the top 5 of operating profit margin of the companies that I follow. So it's ranked among the best of the best in terms of profitability, which is something that I really like when I'm making an investment. If a company can demonstrate to me that it can operate extremely profitably like this. I mentioned that growth prospects are not excellent for Altria Group, but they're also not terrible. For fiscal year 2024, analysts expect Altria Group to grow revenue by 0.7%, and the same for 2025. Yes, mediocre pedestrian growth, but it's not terrible, it's not in decline. And similarly, analysts expect Altria Group to demonstrate earnings per share growth of 2.9% in 2024 and 3.6% in 2025. Now, while the number is not exciting, what I like here is the second derivative, and this is something I've talked about all year long if you've been following my channel, is the second derivative is an important financial metric. You see here Altria's earnings per share growth of just 2.3%, but that increases to 2.9%, again expected for 2024, and then to 3.6% for 2025. So analysts expect Altria to incrementally increase its earnings per share growth over the next few years, and the second derivative is rising. That's an interesting characteristic. Typically, you see this with companies that are way more expensive than with Altria Group. But Altria Group is not expensive, which I'm going to show you a little bit later, the relatively cheap valuation of this stock. Now, I will admit the top line growth rate and bottom line growth rate is not exciting, right? 1% and 3% growth is not exciting. But when you're getting that at such a cheap valuation, then it starts to look attractive. Again, the one thing that I'm not loving with Altria Group stock, and one risk that investors need to look out for, is the levered balance sheet. The company only has $1.5 billion in cash and $25 billion in long-term debt. That's extremely leveraged, right? Very little cash compared to debt. Now, that's usually not a problem for companies like Altria that are very profitable and generate strong cash flow. But still, this kind of leverage poses risks in case there is some major disruption in the business. Just something to keep in mind, and one of the risks associated with Altria Group stock. Among many others, this isn't the only risk, but this is the primary one I'm going to talk about here. I already highlighted that the tobacco industry is in decline, and that's the other major risk with Altria Group stock. But you're getting all of that at a very cheap valuation. Altria Group is trading at a forward price to earnings of 7.918. This is a cheap valuation. And so, yes, you're not getting fast growth. The stock price is not going to double overnight. But if you're a passive income investor looking for dividend income, you're probably not looking for those high-flying growth stocks that can double your money overnight, right? You're looking for solid and steady gains for the long term. And I think Altria Group can deliver that at these valuations. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.